Hello, good day everyone. How are you all today? Welcome back. My name is Hussein and I'm here to bring you all a weekly review of the financial markets, and we will see how actually market reacted to some of the major events that were actually published in the economic calendar. So like I mentioned with you guys that this week we had a GDP from England also in the red, and then we had non-farm payrolls, which was one of the most important data of the week, which was actually released on Thursday instead of Friday. So based on the latest job reports, the US economy is doing great. Approximately 4.8 million Americans returned to work in the month of June, following an increase of nearly 2.7 million in the month of May. Alright, so if you could see that the unemployment rate also was dropped to 11.11% from 13.13%, and these improvements drove the US dollar and stocks higher. Unfortunately, the greenback was unable to sustain its gains as USD JPY and Euro USD traded lower back to pre-NFP levels. Right. So looking at for the after the Bureau of the Labor Statistics admission last month and misclassifications understand it that the employment rate, investors braced for a major downward revision to the last month's report. So yet that did not happen, and instead non-farm payrolls were revised higher for May, with more Americans returning back to work. And if US virus cases did not hit a new high yesterday above 50,000, this would be a great news for the US economy. Well, unfortunately, the outlook is a little bit uncertain, and the larger drop in hourly earnings combined, which is here, hourly earnings combined with lower weekly hours is a sign of its ongoing vulnerability. Alright, so while the gains in the equity markets signals is still optimism, and we see that the COVID-19 outbreak in the US will be the primary driver of the market flow. So looking ahead for Dow Jones Industrial Average. So guys, you see, we have got too much of speculations and we have got too much of things going on, but how we are always analyzing the market. You see, for the past 2 months we are forecasting Dow Jones Industrial Average to be the upside, right? So then also it will also be up to the Federal Reserve and the Congress to support the economy. Throughout the COVID-19 crisis, the primary support of the market has been liquidity, and the extra unemployment benefit runs out of at the end of the month of its extended. If it is in a short-term band aim for economy, that will be another sign of seeing what would be next. But you see, for looking ahead for Dow Jones Industrial Average on H1 time frame, also we see it is forming higher lows and higher highs. All right, after coming out of this previous pattern that it has broken out. So we see that if most likely next week, you see, we'll see more room coming up, and trading on Friday, which is today, should be a bit quiet with US market close in observance of the July 4th holiday, and we will see that there will be less volatility happening in the market, right? So I would just like to share with you some of the currency pairs, how did they respond, and what is the price action we're expecting. I see that for GBP JPY we have more room to the upside coming soon, anytime soon. For CAD JPY we also see an upside coming soon from here, right? And looking ahead for AUD NZ, if not this week, we will see a rally down coming down next week on AUD NZ pair. And looking ahead for let's just say Euro USD, which we have forecasted earlier this week. Alright, so basically it's ranging in consolidation, but we still believe that the risk is to the downside. Alright, probably it's going to come back down from here, from this level to these levels, and then once it breaks these levels, then we will see a more room coming to the downside for Euro USD. Alright guys, so obviously from time to time we will be having more updates and more analysis next week onwards. Like always, we are providing our support to help you guys profitable. As for now, this is Friday, it is the closing bell of the week, and we will be signing off for now, and we'll be coming back again to see you guys next week. Till then, take care.